Hello, guys. Welcome to Traders Therapy Session. I'm your host, KR. Without wasting any time, let's get into today's video. Guys, I felt like I should make a commentary on the live trades that I took, which I will combine with this trade with this video at the moment. But this is what I said I will do after I'm done with the bus driver model. I'm just uploading this just to share with you the examples of the models as we move along. So I just wanted to share some part that I feel like it's missing there, and then you can take advantage of that. I'm not going to go to the higher time frame. I'm just going to focus here. So as you can see before, as we opened, there were liquidity banked leftovers for yesterday's trade, and then we took that liquidity during London. You can see the time previous day high. Previous day high, London opened 2:25 a.m. there. This is when we started taking this one, and then we have that trade right there. That breaker I was also watching, but this is not my time to trade. I even force not forcing things per se, just for demonstration purposes. You can even see the leverage there. The amount of risk is, it's even less there. Then the London will create high before 5 a.m. The London will create the low, the high and the low. So you have your London high, your London low. This is what you are going to deal with for a day. Look at my time frame. It's 5 minutes. So you wait for like you wanna participate on 7 a.m. silver bullet, but around 6 5 6 there's also the liquidity rate here. You wait for that liquidity rate, and if you take out London, this is a Judas swing, by the way. You wait for London to be taken out, then you get your displacement. On a lower time frame, you will see right here, I was waiting for this trade, but I was playing a cash flow quadrant there. And then when I came in, the market was somewhere around here, so I couldn't participate, but I took advantage of this, and I will show you how. Then you will watch the video. This was taken out. I know that when this is taken out, if we can take the London low, we will go for the London high. Oh, that as simple as that. You can make this your model. If you first take the London high, then you will go for London low, especially when there's a relative equal lows. Sorry for that, guys. I didn't have a time to put the liquidity symbols as dollars because I didn't have time for. I didn't think I was going to demonstrate, and I will show you the power of closest hanging fruit. As we moved here, you go to the lower time frame. You can use your 3 minutes. If it's clear, you do have a fair value gap that you can utilize here, and the gap right there. You can move to 1 minute because this is where I was looking at it. Where was it? This was a test, but I knew I did not participate here. You will see where I participated. I did not participate here. This was just a test to see if ever market is willing to go without breaking this. Then obviously, after seeing this being a week, expect the market to come. Then this fair value gap is the one that caught my eye. But unfortunately, the market was very high by the time I arrived. But I was able to utilize an OTE. So, you see, if you have a handful of tools with you that ICT has provided, then I use this. Then I utilize the 62%. But you can see me anchoring that 62% also from this low again. So what was the target? The target was this, but I kept on peeling as the price was moving even high because I was expecting this drop, of course. This liquidity is not convinced to be taken out. So without wasting any time, guys, let's just rush into the video. It takes about 8 minutes, and then you will see me trading live there. See you on that video, guys. I'm trying to run the macro that is running from London. I've been following price. I also capitalize on the practice account right there as well. So I just decided why not to record this video. So you find me peeling of almost maybe 60% of this trade right here. Reason being, we've already taken the London high right there. But I'm anticipating that we might be forming a breaker for New York session. You get what I'm saying? So if we can form a breaker for New York session, so it means this high might also be taken out. So I was using that idea. If you may ask, what idea did I have for that? And then my risk for that was around $40, I guess. And I've already peeled $35 for that. Oh, I peeled $17 as I was busy peeling there. I peeled $17. I don't know why this thing is not updating here. Then right there, before that pullback, let me just peel out one as my candle is going high right there. Okay, this is the balance right there. The total trade, it will be close to 1:1. But with just running the micro right here, the London close micro, because you can tell the previous video that I shared with you guys, the previous video, I mean to say, the one that I shared with you, I did what? I kind of showed you on the pictures, which is the last video on the market maker bus driver model. I've kind of shown you the pictures on how to spot a NYSE trade, but you can also still utilize the very same model because there are certain things there that they come out at a certain time, at a certain space. So you can utilize that and be able to capitalize out of that, because this is like the second entry, is like re-entry. If I can show you, I was just watching this market because there's a video that I posted, guys, about cash flow quadrant. I was playing that game, guys, and it was so amazing. It was like really, really amazing, guys. Like $40 something, my stop loss at break even. Like, I'm okay, even if we can get the test and the Mohawk take us out and still go up. We are not wrong. Did we capitalize out of it? Most probably we did capitalize out of this trade. So as I was saying, guys, this is the re-entry. I just had to take this re-entry. I was watching the first entry. In fact, this has left me, as you can see, I first looked at it here, then, but this, as it was a week, you will see me annotating this. If there's a week as a break, it means the market might come. After this close, that's when we created a breaker. On the lower time frame, this entry was around here with a stop loss below. So you would see me, guys, like, okay, let me sell one contract right here. Let me just put a sell limit and let the trade run. If it wants to go high, let it go high. So as I was saying, guys, I saw this running, and this is better, guys. Like, let me unlock this. This is better, guys. Like, I saw this, it was like somewhere, the entry somewhere here. Let's just run into that. Yes, it was this fair value gap, I think, and below, but it was around 1:5. Yeah, it was something like this the time I was watching. Okay, here we are. It was something 1:5, and I was rushing while I was watching that because this could have even been better. It was something around 1:5 right there. So now let's watch the current one. So as okay guys, as I came into the market, I was a little bit late because it did, yes, it ran some sort of, it ran this high. Then I was watching this as an OTE. If you can look at my fib right here, let me start and show you how. Let's remove this 1:2.6 and let the trade run freely right there. So as you can see guys, I did this mistake earlier. You can see my fib, I anchored my fib not from this low, this high to this low, but my books tells me that this low to this high. Why? Because this is the one that established that high. Let me remove this, cancel this, so that I don't get filled and fail the challenge unnecessarily. So I was watching the price reacting off of the 62% plus the fair value gap as it was closing on a 5-minute time frame. So I saw this as an OTE in the continuation to break even high. This is the reason why my TP was here as a closest hanging fruit, just as a demonstration, guys. So in total, it's $49, close to $50, better than nothing, guys. I hope you enjoyed that one, guys. See you on the next video.